Good morning, everyone. Hope you
Morning.
Good morning, Jaya. Can I make you co-host as usual? Yeah.
Okay, sure.
Okay, done. Okay, just waiting for a couple of people more to join, and we'll get started. You know, as usual, I mean, most of you have been here before, so you know how it goes. But for everybody else, we'll go through a few items in the macroeconomic and crypto news first, and then we open the room to question and answers. So if you have things that you want to ask, please get them ready now. So when it's time, you can either unmute yourself and ask it live, or if you don't feel comfortable talking live, then you can write it in the chat box, and I can read it. I can read the question there and cover it later. Okay, let me start again. Straight away. Sorry, a couple more people joining us. So let me start the news straight away then. Let's start it from there. And by the way, if there is anything in particular that you think is relevant to everybody that you want me to cover during the first part of the session, then again, just send me a message in the chat box, and I'll see if I can slot it in. Okay. Let's start straight away. So, just a little bit of tidying up. Okay. First of all, I just wanted to start with a couple of charts. Okay. So this is not crypto related, but this is the S&P 500. Okay, as you can see, in the past couple of days, it's grown quite strongly, and this is kind of like counter indicative with the announcement that we've seen this week. So you might see why. You might ask yourself, you know, why are we seeing a 4%? Sorry, let me say. 4% growth in the past couple of days when the economic news have been quite negative. Oh, can I get out of this? Okay, when the news have been quite negative. Okay, so let's go and have a look at what happened this week. This is an economic calendar, general economic calendar, where day to day the events they are relevant are listed, and they are also color coded to say which ones are more important or less important. Okay. Yellow are the less important, orange kind of medium, and red are the ones that are really you need to pay attention to. So you're starting from Monday. There was nothing going on Monday, really. Okay, we're going on to Tuesday. The couple important one, really, we look at mainly the American news. They're kind of like more. They are more important worldwide. Obviously, there was some important news from Australia as well, but we concentrate on the American news. And you can see, first of all, the consumer confidence was quite low. So this was the previous month. The middle one was the expectation, the market expectation, and this is the actual data. Okay. Now, in consumer confidence, 100 would be a neutral result. Below 100 is negative, and above 100 is positive. So that means that more people have positive confidence about the market if this index is above 100. So below 100 is more people expect some a negative negative connotation in the future. So more people expect that than positive. Okay, so the lower the number, the worse it is, basically. So that was the first thing, and we can see, quite significant result lower than forecast already. And then on Wednesday, we had the important numbers, which were the base rate in the US. You can say which was pretty much as expected. Okay, so it was a 1.75% before, was expected to go up 75 basis points, or 3/4 of a percentage point, and this is exactly what happened. Okay, but the story doesn't finish there. So in the sense that you can say, why has the market rallied? And you can see here, so gone up 4%, which is a lot, when everybody was expecting the market to carry on going down with such an announcement. Is because really what the market is reacting to isn't so much reacting to the increase in interest rates, but reacting to the expectations for the future. Okay, and so this is where it is important to have a look about details as well, which was, if you see the announcements here, yes, the numbers are the funds rate, which is okay. It is what it is, and you can't really massage the number too much. But then you have accompanying this announcement, we have the statement. And this is why it is important and what everybody looks at, because it's, although the numbers are something that's already happened and kind of like something that had already been priced in, because the market was already expecting that kind of growth. What we do have with the statement is the attitude of the Monetary Policy Committee towards any future, future decisions. Okay, and this is what happened on Wednesday. So what the market reacted to, and this is kind of, there's an interesting article about why this rally happened. This is really following the words of the Fed's chairman, Jerome Powell, which basically said that they have reached now the neutral rate, where the level of interest rates is not either positive or negative for the economy. Okay, and what they're saying as well is that at the moment, so where from the beginning of the year up to now, the Fed was pretty much in autopilot, which, we're thinking, well, inflation is high, we're going to increase the interest rates, increase until there is a result in the, reducing the level of inflation. And at the moment, they said, well, we've done what we wanted to do so far with short-term decisions and increasing the rates fastly to begin with. Now we're going to stop and see. Okay, we're going to stop and see, and we're going to be, so we don't have a stance saying this is what we're going to do in the next 6 months or so on in the next year, but we're going to see what the market does, and then we're going to take appropriate decisions. So in a way, it is neutral from the point of view of the markets, because the markets now don't, know that there isn't any particular direction of travel that the Fed will follow just because they decided to do so, but they're going to see what the conditions are in the market. So then the market that can go out and price expectations according to market participants' opinions rather than according to what the Fed thinks. Okay, and as we can see, the market has its own opinion of what the inflation will be in the future, because there are products already that trade the future expectations. So if we see here, for example, this is what the market has priced in already. Okay, so the market thinks that towards July, so 1 year from now, the inflation will be at 2.9%. Okay, so this is what the market is predicting, and it's already trading at that level. So they're trading inflation swaps at that price. Okay, so this is the expectation, and the market is pricing. So because the market can make its own price at the moment, its own expectations, and there isn't an expectation for the rates to rise anymore. Let me just see. Sorry, I need to go and see a couple more charts. So this is the interest rates, the yield of inflation-linked returns. Okay, so what they call real yields, in the sense that is the return that you will get by holding products priced in US dollars that they give you a return above the rate of inflation. Okay, and this rate of returns have been growing, as you can see, from the beginning of the year, from a negative rate to a positive rate at about 0.8%. They now have started coming down in expectation. So they're trading now at 0.335% as a return, inflation adjusted return. Okay, so as people can get less returns for their dollars, they're now looking at other ways of investing. And this is why, we are seeing the rally in both the market and technology stocks, but also in crypto. And this is why I wanted to add. So if we see the rally in the stock market in the past couple of days, and we can add a couple of more squiggly lines to this. One can be the Nasdaq. Sorry, this is not. So if we can see the Nasdaq 100 index, so the top 100 technology stocks in the US, okay, which is represented by this orange line, and we can see here in the past, again, they had quite a nice growth in this past, a bit more than the rest of the market. So they've grown by 5% in the last couple of days. But also we can compare this to the Bitcoin chart. Okay. And again, as we can see, Bitcoin is actually, as you know, as we are in crypto, it's gone up about 12% in the past couple of days. Okay, so as we know that it is a risk-on asset, that it's leveraged compared to stocks and shares. So as we can see, stocks and shares go up, 4 or 5%. Bitcoin goes up 12. As you can see by this graph, as they were going down, Bitcoin went down a lot more. So it's kind of like almost like a multiplier of the activity in the stocks and share markets. Now, you can see here, this blue line represents the end of last year, 31st of December. So this is really what happened in 2022. Okay. And we can see now this S&P 500 stands at just about 15% drop. The Nasdaq, which is where most of the technology stocks are listed, is down 22%. So when we look at it, it's an extra 50% drop compared to the S&P 500, and Bitcoin is down 50%. Okay, but what is interesting to see is that how we are moving from a completely risk off to now starting to see a movement again towards risk on assets, because of this change in the expectations for the future. So there isn't an expectation of the kind of like prices going up and the interest rates going up all the time. But we will stop and see. So does that mean the interest rates are not going to move at all from now on? Absolutely not. They were just saying that they will see what the data will say before before making decisions. But there is a good chance now that in September there is going to be another raise in interest rates, simply because probably the inflation will carry on going up. But as pieces of news in the week, we went finished there on Wednesday. We had some more news yesterday. They're kind of like quite significant and relevant. Let's see when it decides to come up. So yesterday, we, the GDP in the US was announced. And again, as we were expecting a positive GDP of 0.4%, instead the numbers reported a 0.9% drop in GDP, which is not surprising seeing all the raise in interest rates, which has slowed down the economy. So this is the second quarter that the US had a drop in interest rates. So this is technically a recession. So the US economy has technically entered recession, which is defined as 2 quarters of negative growth, 2 consecutive quarters of negative growth. Okay, so, and this is relevant for the rest of the world because obviously the US is the largest economy. So if the growth is not coming from the largest economy in the world, how likely it is that other economies will follow as well this trend, and will enter into recession as well, especially as many central banks are tightening monetary policy. They're raising interest rates, they're fighting high levels of inflation. But what we got to realize is that in a way you can't have your cake and eat it in a fiat and monetary environment. So if you fight inflation and raise interest rates, at the same time you will dampen economic activity because you raise the costs of being in business, and at the same time you limit the potential rewards because people have got less money to spend. Today we expecting another interesting piece of news, which is the core PCE price index, which is something that's not as spoken of as the CPI, but it's interesting because it's probably what the Fed looks at most when making decisions. And by the way, this is Forex Factory, which is a economic news calendar. There's also news about trading forex, etc., etc. But it's got economic news in general that you can use to know what's coming from in the coming days. If you want to know anything more about any of these listings, you can click on the icon here and open up the details. Okay. So so this is the personal consumption expenditure, and here you can read the description. But the interesting part is that this in particular measures goods and services that target especially towards consumed by individuals. Okay, so and it's calculated in a different way from the CPI, and is calculated on a monthly basis. So when we see this increase, is not compared to sorry, let me go close this. Is not compared to a year ago, but this is month on month. So at the moment, last month we had a growth of 3%, and this month we expect to see a 0.5% growth, which is multiplied by 12, and then think about the compounding effect as well. So then we get to at the moment the CPI stands on 9.1% year on year. So inflation is quite high, but it is will be relevant, not so much in the news, but in what the Fed looks at to make future interest rate decisions. Okay, so and this is because I wanted to concentrate on this sometimes, because you read a lot of things in the news. I mean, even if you go on site like crypto news or general things in the news, you will read that the Bitcoin has reacted to the raise in interest rates by 3/4 of a percentage point. Absolutely untrue, absolutely rubbish. Okay, because that announcement was priced in a long time ago. Okay, so everybody was expecting it. Nothing new was announced that people didn't already know. Okay, so there's no way that announcement will generally cause a more interest in Bitcoin. or any other on-risk assets. Okay, the amount is all because of what Jerome Powell said at the when they if you see on Wednesday when they released the statements, and in a way he's gone from an active stance in controlling what was going to happen in the future to a neutral stance. So kind of like in a way now people are not guided by what the Fed is going to do in the next few months, but it's almost, let's say, okay, have at it. This is like a free market, see what you can do. Okay, and then the market gets to work. We're thinking, fantastic, yeah, we'll see what we can do. We'll do our own thing. I'm waiting for, to be then, for the Fed to decide whatever they will decide because of things that happen in the market. Okay, going now towards more crypto news, crypto-specific news. You might have noticed that Ethereum is gone up a lot recently, and this is because there is more and more interest that is connected to the final merge upgrade. Okay, which is when Ethereum will transition from being a proof of work to a proof of stake blockchain. As always, it's kind of like whenever there are news, there are expectations, there is a growth of interest within a particular project, and that's why Ethereum is jumping so much. It is expected now to happen on the 4th of August, and then so the upgrade to happen on the 4th of August, and then to for the merge to happen between the 6th and 12th. But we'll see exactly what the final date will be. But everybody's been waiting, in the Ethereum ecosystem, been waiting for this moment for years. So this is why there is a lot of interest around Ethereum. Excuse me. On different things. We're talking about MetaMask, which many of you would have been familiar with. Now there is an upgrade that's on the card. That will include an extra step when interacting with dApps. I mean, this is to make MetaMask more secure, because the way that many scams have got access to funds is by basically you interacting with MetaMask with a particular dApp. The dApp will ask for permission to use all your funds of a particular type, and then they would just empty your wallet. Okay, so and generally the thing that happens is that you see what, make it a little bigger so you can see it better. Just hold on a second. Okay, so this is an example. Okay, so when you trying to to access, for example, a particular dApp, there was trading these NFT tokens, you will need, you say, by granting permission, you're allowing the following account to access your funds, and of this particular crypto. Now, and the thing is that you give them permission to access all of your funds, all of them, of this particular thing. So you might trade a small percentage of it, but you're giving permission to spend them all. So the smart contract would have then access to, to spend all your funds, which normally is fine if an app is genuine and everything is like that. But if you've been scammed by being sent a link, and the smart contract is not genuine, but it's like a scam smart contracts, you might then lose all your tokens. In this case, there have been cases that this is like the Bored Ape Yacht Club, which you might have known that there are some NFTs that are worth hundreds of thousands of dollars. So there are people that literally lost millions simply by clicking on the wrong link. Okay, so what MetaMask is trying to do is trying to create an extra step when you give dApps permission to spend all your funds, and this is exactly what you want to do, and you're not you're not being duped into, giving something more permission that they need. Okay, so this is whenever a transaction is requesting set approval for all, there will be an extra step that you'll need to approve separately to make sure that this is exactly what you want to do. Okay, so this is good because it will make MetaMask a little bit more secure, and you'll make you a little bit less likely to get scammed. Although, again, you are your weakest point. So get yourself educated, because some little details like this can make a difference between, having your funds or not having your funds anymore. Okay, so let me just close things as I go along. Now, another thing very interesting is that now the kind of like, you see, as crypto now is getting to start getting considered as a serious assets, and as serious organizations now, they are proposing how to regulate crypto and putting the steps in place to then deal with this kind of regulation. Because, this is the British Law Commission, which is an independent body that's responsible for reviewing and reforming laws. Now, they were saying that the existing laws are not really good enough to cover digital property, because it has completely different aspects to physical property and needs its own infrastructure. So they are recommending categorizing crypto as a new type of property, becoming kind of data objects, being classified as data object, and we then have their own classification and their own laws. They are related exactly to these asset class. So this at the moment is just a recommendation. Then if this is going to be taken forward or not and be, turned into a law, remains to be seen. But it is interesting now that, very important commissions that are taken seriously are starting to get involved. Okay, other things. Now, this is probably the most important news of the week. Everybody would have heard about Crawley Town. Sure, of course. This is maybe if you live in Crawley, you might have heard of it. Otherwise, you might not. But it is interesting as a concept. Crawley Town Football Club is a small football club in the south of England, near Gatwick Airport, and it's the first time they've actually had a vote, which the people entitled to this vote were season ticket holders and NFT. So they sold some NFTs, and these NFT holders have got a right to vote on decisions for the team. In this case, it was which player to buy. Okay, to reinforce the team for the next year. So you were thinking, now this is I wanted to show you, because we can see the kind of things that can, not so much NFT is just a tool. Okay, just a type of token, nothing else from the technical point of view. But it's what it is interesting is that what you can attach to it, the kind of rights that you can attach to it, and you can see how powerful this can be. For example, because an NFT that allows you to, to be emotionally involved, because this is talking about emotional involvement with your, some people form emotional attachment to their football or whatever other sport team from a very young age. So something that can encompass and represents that attachment and connect it to some rights to interact with your teams, it's got a lot of power attached to it. Okay, so this is why the tool is important, because it allows you to do things that were just impossible to do with other things. So the NFT is not just the value of trading the NFT itself, but what the kind of things that you can do with it, you can attach to it, can be just as important as what it is, what it represents itself. On a different thing, but still within the same subject, I wanted to show you a project that is using the Cardano blockchain to prove a garment's provenance. Okay, and something. These kind of things are probably being championed by the VET blockchain that does a lot of supply chain management. But in this case, you can buy shirts or items or clothing, and you will have, together with the physical item, you'll have an NFT that represents exactly what happened during all the supply chain that created that item of clothing. So you know exactly where the cotton came from, where it was printed, where it was sewn, where it was put together, and also the numbers of items that have been produced. So you know kind of like how rare, in a way, that piece of clothing is, how many there are in existence. Okay, so you can see here, as the label has actually a QR code. Okay, so you can scan that and see all these details about your item. So these are the kind of things that, in this case, by the way, this item of clothing is cost $200 in this case, that you can pay directly in Cardano tokens. Okay, and it comes in a limited edition of 60. So you know that only 60 people in the world will have that shirt. I don't know how relevant that is, but it's interesting to see. You can see the concept and how this can be used in the future. So this is all like a circular blockchain economy. So people can use the tokens, the Cardano tokens, to buy the shirt. Also the NFT is on the Cardano blockchain, and the rights connected to the shirt as well are on the Cardano blockchain. The thing is that, from the point of view, yes, this shirt is produced by a company, okay? But once they have put their information on the blockchain, that is then transparent for everybody to see. And they can't change it. They can't go in and change those details. Once it's on the blockchain, it's on the blockchain. It's there forever and is immutable. So in a way, they are, from a company point of view, they're being completely transparent about the list of their suppliers, about the steps that they take for producing that shirt. And and it's interesting, especially for people for whom at the moment a lot of people are interested in who, there is no slave labor, for example, involved in the production of a particular item, that the suppliers are paid, especially in third world countries, are paid a fair price for their work and for their labor, etc., etc. So it's really important from that point of view, because if you are ethically minded, then you can prove exactly how, in practice, you have taken your decisions. And then for people that value those kind of values, can safely buy an item, knowing that their values are being respected. Okay, let me close this. A couple of more things before we go into questions. Now, there's unfortunately kind of like as we keep hearing about exchanges that kind of having to liquidity issue. This is another exchange in Singapore that have filed for bankruptcy. In this case, it's not because they are, completely gone up the wall, so to speak, but because they have liquidity issues, and the bankruptcy filing protects everybody's funds from, let's say, lawsuits, so that they can deal with the liquidity issues without having to worry about fighting any specific lawsuits. On a different case, talking about Solana now. There's another project. Hopefully none of you were involved in Nirvana Finance. Nirvana had a stable coin that they were trying to launch, and there was a flash loan attack that stole a lot of the funds for the stable coin, which are now dropped 85% in value. So what you thought now was worth $1 is now worth 15 cents for each one of these coins. And these are the kind of dangers of dealing with DeFi projects. Okay, so and it is unfortunate there are these news all the time. because you don't know really when you're interacting with a project, because they give you all these rewards, you know, how safe it is from something like this, because this is not, you know, planned as such. This is a vulnerability, a hack, but it is, you know, unfortunately nothing is safe at the moment. Okay. And you know, in a way, what I keep telling everyone is just like, at the moment in this kind of turbulent market, try to concentrate on projects that are already proven themselves. Okay, they're already strong and they got a track record, rather than new projects. Although even established projects like you know, Terra and Luna had, you know, obviously huge problems. On a more positive news for Solana, Solana opened the first physical store in New York City. So it's interesting because, you know, we kind of like starting to see this merge between crypto and the real world. So both the, you know, Solana, and also we had news last week. We were talking about GameStop have launched an NFT. You know, the starters you can buy NFTs as well in the physical stores. So I don't know exactly what you can do in this Solana store, but it's interesting that it is all the time with any one of these announcements, crypto is becoming more and more visible. So if it's kind of like a measure of where we will be in the future, we're just saying the more visible it is, the more users it attracts to itself. So it is thought that just a one store like this will probably attract about 100 users a day, new users to Solana every day, simply by there being a physical store that can attract users that wouldn't otherwise have been attracted to this particular project. Okay, one more thing. Some of you, the ones more careful, they're looking at the markets a little bit more, might have noticed that Uniswap, which is the original, let's say, decentralized exchange on Ethereum, have actually gained 143%. And this in particular after, let's say, for months and months and months doing really nothing, going down in price and not moving at all. And the reason why this is happening is that what has been discussed and has already been put to votes several times in the past, is that Uniswap is looking into the activation of protocol fees. Okay, that means that if that was allowed, that would mean that a fraction of the transaction fees will then go to the protocol, and that will be practically distributed to the token holders in time. So there are different opinions about this, because some people think, well, if protocol fees were introduced, then we probably could end up making Uniswap less attractive to investors, in the sense people that provide liquidity, and then that could move to using different exchanges instead of Uniswap. So it could be counterproductive, but at the same time, if they started charging, it could generate a humongous amount of money for the protocol, because you know, Uniswap is still the largest exchange by far, decentralized exchange, that is. So this is the reason why something like this happens. Okay, so just in case you were wondering. Okay, so I think I've covered most of the things I wanted to talk about. So let me stop sharing then. We got about 20 minutes, and let's get some questions going. So anybody wants to, there isn't anything in the chat. So let's see who wants to unmute themselves and start asking first question. Come on, don't be shy.
Hi, Luca.
Hi, Luca. How you going? Hey, Jonathan.
Hi.
I've got a question on DeFi Kingdom. I've noticed that the looks like the rates have gone down quite dramatically. Could you give any recommendations what we should be doing with it? Where we should be looking at maybe obviously putting our money into the game in different aspects of it?
The rates, they've been just rebalanced. So if you look around, Paul, they've just moved. They've increased the returns of certain pools, and they've decreased them on others. So I think the best returns now on the Avalanche part of DeFi Kingdom. But just have a look. Just go and have a look at the different rates in the different on the different pools. But one thing to realize that when you are in yield farming, so there are two things that you look at. Once is the returns in kind of like percentage point returns as much as such, and the second part is which part of the returns are locked and unlocked. Because although the rates have gone down in DeFi Kingdom, at the same time now we got to the point now where most of the returns are unlocked, so you can use them straight away. Where in other cases, or in other games or other protocols, you might have higher interest rates, but that you have to wait to monetize because they are locked. They are locked and unlocking maybe a few months, or in some cases years down the line. Okay, so that's what. Have a look at the rates in the Harmony side, and have a look at the rates in the Avalanche side of it, and then calculate exactly what works best for you. But yes, they have gone down. And say, they are all designed. If you look at the tokenomics, they are designed to go down over time. But at the same time, the percentage of tokens released straight away goes up at the same time. Okay, Jonathan, you had a question as well?
I was just wanted to point out that the project that you showed from Cardano with the shirt manufacturer, that's actually done by one of the guys I met 18 months ago called A. He almost came with us to the London Summit, but he pulled out at the last minute because they were doing KYC on your way in. So he's a true crypto guy, but yeah, he's involved in it and has helped them with the NFT introduction to that manufacturer. So it just shows, and again, funded by Catalyst partially. So it just shows that from this grassroots ecosystem, we're actually starting to see these shoots rise up now. This is very exciting.
Yeah, I think it's I like that, Jonathan, very much. I didn't know that, actually. Thank you for sharing. What I like about it is that we're moving from a kind of like a ecosystem where people are doing things and you're just the user, to where now the users are creating things in the same way. Like, if we look at something like Amazon, for example, in the past, where the way that we used Amazon mainly was to buy things cheaper, and then they've grown as a marketplace, as an ecosystem. Now the people they build businesses, use Amazon as the infrastructure. And the same thing now is happening in crypto, where before, a few years ago, we're just like, will this thing work? Can we create something that has got utility for the future? Now that case has been proven, and now people can go in and do their own things, launch their own business, but using this infrastructure. And Cardano is fantastic from that point of view because of the funding model, as Jonathan was mentioning about Catalyst, in the sense that everybody can have access, anybody with a good idea can have access to that funding, and then they can. This is what is kind of like what has been lost from the passage from the gold monetary standard to the fiat monetary standard, is that the market decides what's the best thing to do, where's the best place to invest money, because at the end of the day, in a gold standard, the market decides, okay, we want more of that, whatever that is, whether it's an apple, whether it's a key or a physical item, and then investments will go wherever demand is. Okay, so this is the way it works, and it's a way that, like, the market knows best. When there is somebody else wholly either me or somebody else or the government that decides, I decided that is best where to invest the money, can never be right. Could never be right 100%, because one actor, however powerful that actor is, whether it's the king, the government, or whatever, the United Nations, can never know exactly what everybody wants. The market is the only way to bring all that together and to price at the right amount. And this is exactly what's happening with with the system, the funding system on Cardano, is that the community, the market, is deciding what's the best thing, what's the best way of employing this money. Nobody's got there isn't a guideline that say this money must be spent in that way. Just consider it, well, you propose and then the best proposals win. And that's the real way that the market should work. And it's a way, it's fantastic that they found a way to replicate the best part of a market economy within a cryptocurrency project like that. So I'm really excited from that point of view, because it combines the innovation that Bitcoin brought with the usability that is not there in the Bitcoin ecosystem. So yeah, thank you for sharing that, Jonathan. It'd be great to actually meet this guy next time there's a meetup.
Yeah, I think September 3rd is the next one. So I'll invite him out to that, see if we can get some insights into how he's worked it. Yeah, that'd be good.
Yeah, and also here in the community in London, we have Eric as well, that some of you might have met in Roger Hamilton's events, and he's already had a couple of has won a couple of funding rounds for projects that is launched. So you can see that these things are possible, and with the right knowledge and the right way of pitching is very possible to get access to these funds. Okay, anybody else?
Luca,
yeah,
I've learned some time ago that there is wine which has got the QR code to show its way from the producer to the buyer.
Mm-hmm.
And like now with the shirt, can't I fake the QR code and then use the fake QR code? Because when you go to other places, you see all Nike labels and you see all different labels, they all copied. Can you copy a QR code?
Yeah, of course you can copy a QR code, but you can't copy a blockchain, because the thing is that the information is stored on the blockchain, which is not in one place, is in thousands of different places. So at the same time, so if you say faked a QR code, then yes, it could take you. That QR code can take you to a website, but if you actually want to prove on the blockchain that is correct, that would be proven as false, because those records are not stored by everybody's records on their nodes. I mean, maybe Jonathan can confirm that I'm not talking rubbish completely.
No, exactly right. So the every NFT that's produced has a policy ID, which is like a long string of numbers, and that's like a bit like a wallet address, and that's unique. And so any NFT, any brand that's releasing the logistics information, the provenance of their piece of clothing, or will have that policy ID within the destination of the QR code. So when you click the link, you go to the blockchain to check that it's true what they're telling you. If the policy ID doesn't match the one has come from the retailer, then you've probably gone through a dodgy QR link. So there's still going to be ways for people to try and dupe you, but actually you personally can go and verify it on chain is the big difference now. In that what's written on the label is going to have to be backed up by and can be interrogated by anybody and everybody just to make sure it's true. So you could be able to report fake QR codes. You'll be able to, you know, when you're wandering down Camden High Street picking up Gucci's, then you'll know that it's not quite the legitimate item just because the blockchain is showing you. So you can report it, and it'll get picked up and taken down. So it's a new world, new transparency world that we're entering.
Yeah.
But if if I use that shirt, let's say, with the original QR code, and I copy a QR code, how does the blockchain know which one is the real one and which one is the copy one?
So if it's an identical shirt, then yeah, you're going to, with a faked QR code on it, then you're going to struggle. What you will know is if and when that shirt was bought and who the retailer was, because that information will be on the blockchain as well. So if you've bought it from eBay and the purchase date is before the sale date of the legitimate item, then you know something's gone wrong. But it's afterwards. You could maybe say, well, I bought this from a guy in France. Yeah, I know that the retailer was in the UK. Then, you know, there's, you know, it's all information. The way you interrogate it, the way you interpret it, is still going to be down to you doing your own research. But yeah, certainly when you're tracking back art provenance from an auction house, you go through that process to make sure that the provenance was correct, and this is actually the ancient piece that you think you're buying. So that would just be easier to do now, and would be possible on all the products that we buy, rather than just the ones that are, you know, so valuable that they've had to have that information tracked.
Okay.
Thank you very much.
This technology, Eric, was just, I mean, it's been around, you know, obviously the not so much the QR codes, but the barcodes for to prove the supply chain. It's been available for years. Like in Italy, it's been used for both wine and olive oil, for example, you know, to prove all the different steps in you know, from the where the fruits were produced to where they were worked, where it was bottled, etc., etc. The difference is now with the blockchain that everything is, you know, is public, is stored publicly, and everybody can see, and everybody can check it. So there's a bigger like one step further, and kind of the more you make this public, the more difficult it is to fake, because like in blockchain, you know, that you can't. That's the big innovation, is that your digital currency that you couldn't just be copy and pasted, you know, like you do with other things online, you know, and the same thing. The more information there is out there that everybody can check, the more difficult it is to fake it. And being Italian, I know very well about, you know, fake items. You know, Italy, you go to certain markets, you can buy good quality fake items and low quality fake items as well. So there is a very, very, very good market going. You know, if you want to buy, I don't know, a Benetton jumper or something like this, you know. So yeah, it's a massive step forward for proving provenance. It's one of the you know, usable the things that you can use blockchain in the real world right now, which is great.
Thank you.
Yeah, Jonathan actually posted a link to the app that Eric has got funding for, you know, on the Cardano Catalyst funding round. So go and check it out if you want to see. Eric is a French guy living in London, been into programming and you know, working on ID solutions and other stuff for years. So interesting, very interesting guy to meet. Okay, are there questions, please? Got another 5 minutes before the end of the session, so And again, until you think about your question, just remind everybody that Jonathan has a session at 9:30. Cardano specific question and answer session. So he will post as usual the link in the chat box, so you can go, and I will encourage everybody to go and follow that as well, so you can have a double information session on a Friday. Jeff, do you have a question? I noticed that you're muted yourself.
Yes, I was just trying to get a feel. I know you're an economist, and therefore from a more macroeconomic perspective, do you have a feel for, I know you don't have a crystal ball, but a feel for what the economy is doing? Because is it still looking like it's under pressure and still gonna, especially from a crypto perspective, still stay at the current level or probably drop? Or when do you start to see that there may be a recovery overall?
Well, from the economy point of view, we're still waiting. The interest rates will get much higher than what they are now. Yeah, that's almost kind of like inevitable, but it's also by doing that they will push the economy into recession. So, and you can see it's already happening in the US. I mean, probably in September we'll see the interest rates in the US going up by at least another 0.5 percentage point, if not a whole percentage point. And the same thing in Europe and the UK. So things will get a lot harder. And at the same time, we're still going through the war in Ukraine, which affects food prices and energy prices across the world.
Yep.
So I can't see any, green shoots anytime soon. But the point, it was interesting to see what the market was pricing in, because if they pricing in a kind of like a low inflation back to manageable levels by 12 months from now, that's a kind of like a good. We're getting back onto like an even keel when the market can start, not being punished for just trying to do business. So we might take 6 months plus to start seeing a full recovery, because at the moment we might, the way I see it right now is that we might have a kind of like a mini boom in risky assets, because they've been, for the simple reason, they've been pummeled for the last year or so. So you might have a mini boom in the summer before we get the next wave of interest rate rises, and the next wave of negative economic results. So we might have a couple of months of growth, and then we can have another quarter of dropping, potentially.
And is there any link into the Bitcoin halving cycle as well? Because is it like 2 years before, or a year before the halving it starts to pump, or something like that? Is there? Well,
I'm very wary to do things like that, because people thinking, people say, oh, this is always happening for Bitcoin. Bitcoin has only got 12 years history. You can't start making long-term decisions, because the halving has happened 3 years in the past, three times.
3 times, yeah.
Okay, 3 times. So we can't say because it's happened a couple of times before, because this always happens before a halving. The next halving should be in 2024 anyway, so it's still a way away. But what we might see is, if there is no return for holding dollars, whoever holds these dollars must put them somewhere. So the reason why things go up and down is because people try to put their money wherever works best. And if interest rates, are in kind of like inflation adjusted interest rates are going down, so people have been looking at now and they think, well, we can't get free money simply by holding our dollars. Then we need to put our money to work somewhere else. So we need to invest in the stock markets. We need to invest in crypto. We need to in things that are more risky. And this is what we're seeing. We're seeing this now. We're seeing this kind of like growth, even if the interest rates have gone up, which is a negative for the market. But we see, the stock market going up and the crypto market going up. Okay, simply because it'd be okay, this is not working. Let's do something different that can bring in some more money.
Okay. Okay, useful. Thanks.
Yeah, no problem. Okay. Okay. Okay, guys. It's. I can take one more question if there is one. Otherwise, we'll close the session here. It's 9 o'clock. Anybody with the last question? Okay. So if there are no questions, I will again wish you all a fantastic weekend. Really enjoy your weekend. Keep an eye on the crypto news. There are, by the way, the more people that think that this is a fake out, people think there is a breakout. Okay, so we've seen Bitcoin going up and being hovering around the $24,000 level. We'll see. We need some proof. We need some proof before deciding this is a new a breakout and we're going towards the 30,000 levels, but we might be. So keep an eye on the charts and do what we discussed last week as well. So looking for draw your own lines and see if those lines get broken with confirmation, and then if they are, you might decide to get back in the market. But as I said before, it's a time to start looking at at least if you don't already have portfolio in crypto, to start looking, at least averaging your entry in. Okay, so have a great weekend, and I will catch up with you again next week. All right, goodbye everyone.
Thanks.